These are today's objectives. Give the meaning of accounting. Define the 5 major accounts. Discuss debit and credit. Understand the usage of debit and credit. And identify the rules in debit and credit.
What is accounting? Accounting is a process of identifying, recording, and communicating economic events of an organization to interested users.
It is an art of recording, classifying, and summarizing in a significant manner, and in terms of money, transaction, and events, which are in part at least of financial character and interpreting the result thereof.
It is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions. What are the 5 major accounts? The 5 major accounts are asset, liability, equity or capital, income or revenue, and expense. What is assets? In financial accounting, an asset is any resource owned or controlled by a business or an economic entity. It is anything that can be used to produce positive economic value. Assets represent value of ownership that can be converted into cash. These are the examples of assets: cash and cash equivalents, accounts receivable, inventory, investments, PPE or property, plant and equipment, vehicles, furniture, and patents, or intangible asset. What is liability? Liability is used to describe any kind of financial obligation that a business has to pay at the end of an accounting period to a person or a business. Liabilities are what you owe the other parties. Examples of liabilities: accounts payable, salaries and wages payable, notes payable, income taxes payable, mortgages payable, payroll taxes, and loan payable. Equity or capital. Equity or capital is ownership of assets that may have debts or other liabilities attached to them. Equity represents the value that will be returned to a company shareholders if all of the assets were liquidated and all of the company's debts were paid off. We can also think of equity as a degree of residual ownership in a firm or asset after subtracting all debts associated with that asset. These are the examples of equity or capital: common stock, preferred stock, retained earnings, additional paid-in capital, treasury stock, dividends, owner's capital. Income or revenue. Revenues are the assets earned by a company's operations and business activities. It is the money that an individual or a business earns from selling products or services to their customers. Examples of income or revenue: sales, service revenues, fees earned, interest revenue, rent revenue, dividend revenue, and contra revenue. What is expense? An expense in accounting is the money spent or cost incurred by a business in their effort to generate revenues. Essentially, accounts expenses represent the cost of doing business. They are the sum of all the activities that hopefully generate a profit. Examples of expenses: rent expense, utilities expense, wages expense, salaries expense, maintenance expense, depreciation expense, and insurance expense.
What is the golden rule in accountancy? To put it in simple terms, the golden rule of accounting are a set of guidelines that accountants can follow for the systematic recording of financial transactions. They revolve around the system of dual entry, debit and credit. We have to know which accounts have to be charged and which needs to be credited. Now let's take a look at the three main rules of accounting. First, debit what comes in and credit what comes out. Second, debit all expenses and losses and credit all the income and gains. Third, debit the receiver and credit the giver. What is debit and credit? Debits and credits indicate where value is flowing into and out of a business. They must be equal to keep a company's book in balance. Debits increases the value of assets, expenses, and loss accounts. Credit increases the value of liability, equity, and revenue. In short, debit records all the money flowing into an account, while credit records all the money flowing out of the account and gains accounts. The origin of debit and credit. The terms debit and credit have Latin roots. Debit comes from the word debitum, meaning what is due, and credit comes from the word creditum, meaning something entrusted to another or a loan. Debits and credits accounts were formally invented in the 15th century by Luca Pacioli as an official system to specify what was already used by merchants in Venice. The usage of debit and credit. Debits and credits are used in company's bookkeeping in order for its books to balance. Debit increases the assets or expense accounts and decreases liability, revenue, or equity accounts. Credits do the reverse. Now let's go to the rules in using debit and credit. This is the rule chart that we should keep in mind. As seen in the rule chart, assets are increased by debits and decreased by credits. Liabilities are increased by credits and decreased by debits. Equity accounts are increased by credits and decreased by debits. Revenues are increased by credits and decreased by debits. Note that debits are always listed first and on the left side of the table, while credits are listed on the right side. Since our debit is now complemented with an equal credit, the transaction is balanced and will be reflected properly on the financial statements in the future. Accounting equation. The fundamental accounting equation, also called as balance sheet equation, represents the relationship between assets, liabilities, and the owner's equity of the person or business. It is the foundation of the double entry bookkeeping system. For each transaction, the total debit equals to the total credit. This is the accounting equation. Asset is equal to liability plus equity. Now, let us proceed with the example transactions.
Miss Kai Monell owned a business named Kai's General Merchandise and had the following transactions for the month of March 2020. Transaction 1 dated March 1. Miss Monell invested 500,000 in cash in the business. Accounts affected. The debit is cash, the credit is C. Monell Capital. Transaction 2 dated March 4. Purchased goods worth 455,700 on account from Lit Company. Terms 2% discount in 10 days within 30 days. Accounts affected. Debit is merchandise inventory, credit is accounts payable. Transaction 3, dated March 7. Purchase 105,800 worth of goods from Harvey Corp on account with terms 3% discount in 15 days, 2% discount in 25 days within 30 days. Accounts affected. Debit is merchandise inventory, credit is accounts payable. Transaction 4, dated March 10. Sold goods to Robilita Management worth 550,400 in cash. The cost of the goods is 180,900. Accounts affected. Debit is cash and cost of goods sold. Credit is sales and merchandise inventory. Transaction 5, dated March 12. The company returned 20,000 worth of goods to Lit Company. Accounts affected. Debit is accounts payable. Credit is merchandise inventory. Transaction 6, dated March 14. Robilita Management returned 165,120 worth of damaged goods. Cost of the returned merchandise is 54,270. Accounts affected. Debit is sales returned and allowances and merchandise inventory. Credit is cash and cost of goods sold.
Transaction 7, March 18. There are 2 transactions made in March 18, so let's start with the first one. So the first transaction on March 18, paid salaries of employees worth 27,900 pesos, and the account affected in debit is salaries expense, and for credit the accounts affected is cash. So now, let's go with the second transactions. Made on March 18, paid the advertisement worth 93,780 pesos to a local paper. The account affected in debit is advertising expense, and for credit, the account affected is cash. Transaction 8, March 19. Sold goods to Cavales Incorporated, 690,800 on account. The cost of goods sold is 289,590. Terms free on board, freight bills is 2,000. The accounts affected in debit is account receivable, cost of goods sold, and freight out. And the account affected in credits is sales, merchandise inventory, and lastly, the cash. Transaction 9, March 21. Paid Harvey Corp in full. The accounts affected in debit is accounts payable, and the accounts affected in credit is cash. Transaction 10, March 24. Collected 30% of the accounts of Cavales Incorporated. The accounts affected in debit is cash, and the accounts affected in credit is account receivable. Transaction 11, March 25. The owners withdraws 55,890 for personal use. The accounts affected in debit is Simonel Drawing, and the accounts affected in credit is cash. Transaction 12, March 27. Purchased goods worth 190,800 in cash and sold it to a customer for 450,700. Accounts affected in debits is merchandise inventory, cash, and cost of goods sold. And the accounts affected in credit is cash, sales, merchandise inventory.
These are all Ms. Kai Monel's business transactions from the month of March 2020 and the accounts affected.
Let's proceed. Now, let us try to 1. Record the transaction of Kai's general merchandise in a general journal. 2. Post the transactions using the general ledger. And 3. Prepare the unadjusted trial balance. This is the chart of accounts in Kai's General Merchandise. General Journal. Transaction 1. March 1. Miss Monel invested 500,000 pesos in cash in the business. In the General Journal, cash will be debited with 500,000 pesos and C. Monel Capital will be credited with 500,000 pesos. Transaction 2, March 4. Purchase goods worth 455,700 on account from lead company. Terms, 2% discount in 10 days within 30 days. In the General Journal, merchandise inventory will be debited with 455,700 pesos and accounts payable will be credited with 455,700 pesos. Transaction 3, March 7. Purchase 105,800 pesos worth of goods from Harvey Corp on account with terms 3% discount in 15 days and 2% discount in 25 days within 30 days. In the General Journal, merchandise inventory will be debited with 102,626 pesos and accounts payable will be credited with 102,626 pesos. Transaction 4, March 10. Sold goods to Robilita Management worth 550,400 in cash. The cost of the goods is 180,900 pesos. In the General Journal, cash will be debited with 550,400 pesos and sales will be credited with 550,400 pesos. Cost of goods sold will be debited with 180,900 pesos and merchandise inventory will be credited with 180,900 pesos.
Transaction 5, March 17. The company returned 20,000 pesos worth of goods to lead company. In the General Journal, accounts payable will be debited with 20,000 pesos and merchandise inventory will be credited with 20,000 pesos.
Transaction 6, March 14. Robilita Management returned 165,120 pesos worth of damaged goods. Cost of the returned merchandise is 54,270 pesos. In the General Journal, sales returns and allowances will be debited with 165,120 pesos and cash will be credited with 165,120 pesos. Merchandise inventory will be debited with 54,270 pesos and cost of goods sold will be credited with 54,270 pesos.
Transaction 7. There are two transactions made on March 18. The first one is paid salaries of employees, 27,900 pesos. In the General Journal, salary expense will be debited with 27,900 pesos and cash will be credited with 27,900 pesos. And the second one is paid the advertisement worth 93,780 pesos to a local paper. In the General Journal, advertising expense will be debited with 93,780 pesos and cash will be credited with 93,780 pesos. Section 8, March 19. Sold goods to Caballes Incorporated, 690,800 pesos on account. The cost of goods is 289,590 pesos. Terms pre-on-board destination. Freight bill is 2,000 pesos. In the General Journal, accounts receivable will be debited with 690,800 pesos and sales will be credited with 690,800 pesos and the cost of goods sold will be debited with 289,590 pesos and merchandise inventory will be credited with 289,590 pesos The last sprayed out will be debited with 2,000 pesos and cash will be credited with 2,000 pesos. Transaction 9, March 21, paid Harvey Corp in full. In the General Journal, accounts payable will be debited with 102,626 pesos and cash will be credited with 102,626 pesos.
Transaction 10, March 24. Collected 30% of the account of Cabales Incorporated. In the General Journal, cash will be debited with 207,240 pesos. An account receivable will be credited with 207,240 pesos. Transaction 11, March 25. The owner withdraws 55,890 for personal use. In the General Journal, seasonal drawing will be debited with 55,890 pesos and cash will be credited with 55,890 pesos. Transaction 12, March 27. Purchased goods worth 190,800 in cash and sold it to a customer for 450,700. In the General Journal, merchandise inventory will be debited with 190,800 pesos and cash will be credited with 190,800 pesos. Cash will be debited with 450,700 pesos and sales will be credited with 450,700 pesos. Cost of goods sold will be debited with 259,900 and merchandise inventory will be credited with 259,900. Unadjusted trial balance. This is Kaimonel's General Merchandise Unadjusted Trial Balance from March 1 to 31, 2020. Cash. Debit 1,070,224 pesos. Accounts receivable. Debit 483,560 pesos. Merchandise inventory. Debit 53,006 pesos. Accounts payable. Credit 435,700 pesos. Simonel's Capital. Credit 500,000 pesos. Simonel's Drawing. Debit 55,890 pesos. Sales. Credit 1,691,900 pesos. Sales return and allowance. Debit 165,120 pesos. Cost of goods sold. Debit 676,120 pesos. Freight out. Debit 2,000 pesos. Advertising expense. Debit 93,780 pesos. Salaries expense. Debit 27,900 pesos. In total, debit is 2,627,600 pesos and in credit is 2,627,600 pesos. As we can see, they are equal. And that is all for today. Thank you for listening and we hope that you have learned something from our discussion.